Good morning, everyone. Welcome back to this discussion on accounting standards. So, we have been discussing consolidation. And in terms of consolidation, we have been discussing about holding and subsidiary. So, today we plan to continue on that. Yeah. So, today we'll get on to some more topics as around the consolidation. And again, we'll look at some questions alongside. Okay. So, that's the agenda for today. And to begin with, I think we can do a quick recap. And for doing that, I think we can just pick up one example. Okay, so through that, some of the things around goodwill, capital reserve, how to compute that, minority interest. Yeah, so those are the things we can just look at. And of course, then we'll move further as well. Okay, so it will be great if you can just move on to one example now. That is question one. Okay, so if you want to refer the study material, you can refer that. All right, so now you are given some information and you are required to compute two things. One, that is minority interest, and second is goodwill or capital reserve. Okay, now as around the minority interest, goodwill or capital reserve, can you tell me on what date these are required to be computed? Over to you. What is the date when you are required to compute goodwill or minority interest? To begin with, yes, very good. So Hardik says date of acquisition. Great. Pranav has the same answer. Now, date of acquisition is very, very important because this is the date when some of these computations will be done. Many a times the question may ask you to compute or to, to compute these amounts on the date of reporting. So irrespective of whether the question requires that amount to be computed on the date of reporting balance sheet date or not, if the date of acquisition is different from the balance sheet date, so you will be required to compute these things first of all on the date of acquisition, and then you need to carry forward the number. All right. Yeah. Okay. So now let's look at the information which is available. So now, and I think there's third more thing which is required, that is profit share of the holding, or you can say the amount of the reserves of the holding company, which will be shown in the consolidated balance sheet. Okay, so now the information is available about the subsidiary company. So there are four case scenarios which have been covered. And for each case scenario, there's a different company. For each case scenario, percentage holding is different. Yeah. So please remember they are all subsidiaries, irrespective of the percentage which is held. And then the cost is given. So what do you mean by this cost? Cost means cost of investment. Okay, means the price paid to acquire this subsidiary. Then we are also given share capital and balance of profit and loss on the date of acquisition, which is on 1st January X1. And it appears to be a calendar year. So that's why on the date of reporting, that is 31st December X1, we are again given share capital and profit and loss account. Now, in this case, can you tell me what is the relevance of this information about share capital and P&L account? So why is that required? How does it help us in some of these type of questions? Any thoughts? So where does it help us? What is the relevance of these? Okay, great. Sukhveer says to calculate net worth. Very good. See, when it comes to the net assets of a company, so how do you compute the net assets? By getting onto their share capital plus the reserves. Yeah, so that is where this information becomes relevant. Yeah, same is the response from Hardik and Tambeshwari. Great. Okay, Ragini has the same answer. Great. All right, so now what we will do is we will get on to all of these amounts one by one. Yeah, but we have four case scenarios, so that's why for each case scenario we need to compute this. Okay, so now if you pick up minority interest first, so that is going to be a very, very simple exercise. Very simple exercise. Why? Because as around the minority interest, what is it that you need to do? You need to pick up the proportionate share of equity. Yes or no? You need to pick up the proportionate share of equity. And how do you pick up the proportionate share of equity? By picking up proportionate share of net assets. Yes. So if you pick up the proportionate share of net assets, so that is what is equity for you. Okay. So now, in this case, minority interest is required to be computed on two dates: date of acquisition and date of reporting. So that's why, what will you do? You will also require two amounts, two amounts about the net assets of the subsidiary on the date of acquisition and on the date of reporting. So are those two figures available to us? The answer is yes. So if we look at this case 1 for subsidiary A, what are the net assets on the date of acquisition? 1 lakh plus 50,000. 1 lakh 50,000. Correct? And what is the percentage holding of minority in this case? That is 10%. Why? Because if the holding company holds 90, so the minority will hold 10. Yeah. So in first case, we have 10% holding. Net assets are 1,50,000. So the proportionate share of minority will be what? 15,000. 15,000. Okay. Similarly, if you look at this net asset on the balance sheet date, it is 1,70,000. So on the balance sheet date, proportionate share of minority will be what? 10% of this. Simple. Easy to compute. Yes or no? Yeah. Simple. Okay, great. Similarly, we can compute this minority for case 2, 3, 4. Now, let's look at case 4 first. Yeah, because this seems to be interesting. In case number 4, that means if you talk about subsidiary company, what is the percentage of minority? Tell me. It is 0. Why? Because if subsidiary is wholly owned means all the shares of subsidiary are held by the holding company. So there will not be any minority. Okay. So therefore, in this case, what will you do? You will say your minority is 0. And can it change? Yes, it can change the moment this percentage holding will change. But in the given question, we understand percentage holding has remained same. Okay. Now, with this, we have completed one part of the question. And what was that? Calculation of minority. Okay. Now please, without looking at the solution, can you also help me with the amount of goodwill or capital reserve in each of these case scenarios on your own quickly? Yeah. Can you please quickly solve this and let me know your answers? So I'll also get on to the solution, but it will be great if you can solve and let me know. Okay, for each of these case scenarios, case 1, 2, 3, 4, quickly. So I'll just wait for 1 minute for you to solve and start sharing the answers because it's not a big competition anyways. Yeah. Okay. So now for calculation of goodwill or capital reserve, what do we need to begin with? Cost of investment, or you can say purchase consideration. Is that available to us in the question? The answer is yes. That is available. And corresponding to this cost of investment, what do we need? Net assets. Net assets, anyways, we have seen that is available. Okay. So therefore, What is going to be the amount of goodwill or capital reserve? Difference between these two. Yes or no? Difference between these two. Okay, so I think I've got this answer from Abhishek. Abhishek is getting capital reserve in the first scenario, means case one. Sukhveer is getting goodwill. All right. So I think you are getting different answers. No worries, it's possible. So it doesn't matter whether your answer is wrong or correct. Important thing is you should try, attempt. Okay, Sanya, Nitin, they have also shared their response. Hardik is getting, I think Hardik is shared for all, all the cases. Very good. Pranav has shared. Great. All right. So let's get on to that calculation now. Now, for each company, percentage holding is given in the question itself. Cost of investment is also given. Okay. Also, the total net assets. Now, please remember that the total net assets is something you will take when it is wholly owned. For example, case 4. Otherwise, what is it that you are required to do? You are required to pick up proportionate net assets. Yeah, proportionate net assets in each case. And this amount of net assets means the proportionate amount you will compare with the purchase consideration, or you can say these are the two amounts that you will use for your calculation. So for case 1, what do you get? Goodwill. Case 2, you get capital reserve. Why should there be a capital reserve? Whenever the purchase consideration is lower than the amount of net assets. So you'll have a capital reserve. In case 3, purchase consideration is equivalent to the amount of net assets. So we'll not have any goodwill or capital reserve. And you may be thinking, sir, is it possible? Yes, that's possible. There's absolutely no problem. Yeah, so it may happen there's no goodwill or there's no capital reserve. Completely okay. Case 4, again, you have a goodwill. You have a goodwill, right? Yeah. Everyone clear? I'm just hoping there are no questions, but still, if there is any doubt, you may let me know. Yeah. Everything clear so far? Because this is very much on the same concept that we have discussed. Now, moving on to the third part of the question. See, in the third part, you are required to show the amount of the reserve and surplus which will be taken to the balance sheet. Okay, so now let's move on to this third part. Amount of holding company's profit in the consolidated balance sheet, assuming holding company's own profit and loss account was 2 lakh. So what does it mean? So you can say the reserve of holding company. So there are two companies, holding and subsidiary. So when you will prepare the consolidated balance sheet, you will add reserves of holding, reserves of subsidiary. Correct? Now the reserves of holding are what? 2 lakh in all the case scenarios. So this 2 lakh will be taken everywhere. In all the cases, 2 lakh will be there. Now to this 2 lakh, you will have to check as to what is it that you add. Okay, you'll have to check what is it that you add, right? Now, for all of these case scenarios, let's get on to the calculation. Okay, now, any balance in the P&L account that you will have on the date of acquisition, what do you call it as? Pre-acquisition profit. And we discussed that is also called as capital profit. Okay. As such, the balance of consolidated profit and loss account shall be equivalent to holding company's profit. Now, on 31st December X1, in each case, the following amount should be added or deducted from the balance of holding company's profit and loss account. So now, at the first place, in case 1, when the percentage holding is 90, profit of subsidiary on acquisition date was 50,000. On the balance sheet date was 70,000. Okay. Now, during the year, what has been the profit in case of a subsidiary? 70,000. So the subsidiary has earned, sorry, during the year 70 minus 50. So subsidiary has earned 20,000 during the year. Okay. Now, holding will get its share of this reserve. Why? Because one part of this profit has been picked up by whom? Minority interest. Yes or no? So when you have computed the minority interest at the year end, 10% has been taken up by minority. Yeah. So 90% of this profit will go to whom? Holding. Holding. Yes or no? Okay. So now 18,000 is what you will take to the holdings account along with that 2 lakh. Similarly, in each of these case scenarios, you can do this exercise. Yeah. Okay. Everyone clear? Any questions, any doubts on this? Quickly, huh? Any questions, any doubts if you have? Then we can just move on to another question. No, everyone clear? All right. So we are going to continue on this very concept about the minority and some of these things. Okay. And that's why what I'll do is I'll just pick up this question 4. Because in this question, again, our calculations, all of those computations are not going to change. But there's one more aspect about the minority that you will get to know. Okay, so let me just quickly discuss that concept and then I'll come back to this question. Standard says the losses which are applicable to minority in a consolidated subsidiary may exceed the minority interest in the equity of the subsidiary. In such cases, so at times what may happen is the losses of the minority may exceed. Say minority balance is what? 1 lakh. Okay. And the losses could be 1,20,000 or the share of the loss. I'm talking about the share of the loss of the minority. So in such cases, standard prescribes that excess and any further losses applicable to minority are adjusted against the holding company's interest, except to the extent that minority has a binding obligation to make good the losses. Okay. So what is required is that every time when you look at the loss situation for a subsidiary, a portion of that which is required to be given to the minority. If the question doesn't specify, now please remember, if the question doesn't specify that minority has a binding obligation to make good the losses. So what will you do? Any excess. So let's suppose if the balance of minority is 1 lakh and the share of the loss of minority is 1,20,000. So you'll make the balance of minority 0. So if you do that, you are still left with a loss of 20,000. So this loss of 20,000 you will take to holding company. Okay. And in the future, when there are profits, you will pass on the profit to the holding companies first to the extent you have transferred those excess losses which were not absorbed by the minor. Okay. Now this concept I think can be better understood if we look at one example. Okay. Because even though I have conceptually discussed, but you will not get clarity till the time we actually get on to the example. Okay. So for which we will pick up this question. Yeah. Okay. So now Kiran has a point. Kiran is asking, is holding company share can be shown as investment in holding company consolidated balance sheet? No, in the consolidated balance sheet, the investment which the holding company will be having in the subsidiary, that will get knocked off. So we'll talk about it. Okay. Yeah. So in fact, today we plan to cover consolidated balance sheet also. Okay. So in that case, we'll pick up that. You'll get to see as to how those are knocked. All right. We'll get on to that. Okay. I think Tameshwari has shared some calculation. I'm not sure. Maybe this was for the previous one. No worries. Anyways, we have looked at the solution. Okay. All right. So let's look at this question now. A Limited acquired 70% equity shares of B on 1st April X1 at a cost of 10 lakh. Means 10 lakh was paid to acquire 70% equity shares of B. When B Limited had an equity share capital of 10 lakh and the reserves and surplus of 80,000. So what does it mean? On 1st April X1, net assets of B are given to you. In the 4 consecutive years, means for the 4 years to follow after the acquisition date, B Limited fared badly, means the subsidiary which has been acquired, this suffered losses. So for all the 4 years, losses are given to you. 2,50,000, 4 lakh, 5 lakh, 1,20,000 respectively. Okay. Thereafter, means 4 years information is given. Thereafter, in X5, X6, so it appears to be 5th year. Yeah, so you have X1, X2, first year, X2, X3, X3, X4, X4, X5. Okay, so that means X5, X6 is 5th year. In the 5th year, B Limited experienced turnaround and registered an annual profit of 50,000. Okay, so B Limited has moved into profits. And in 6th and 7th year, means X6, X7, X7, X8, B Limited recorded annual profits of 1 lakh and 1,50,000 respectively. So means for 4 years there are losses, next 3 years there are profits. Now in this case, you are required to show minority interest and cost of control at the end of each year for the purposes of consolidation. Now please remember, question is asking you about these amounts at the end of each year. Okay, so you are not only required to compute this on the date of acquisition. Of course, you will begin with the date of acquisition, but at the end of year, you are required to show these amounts. Okay, so now in this example, our idea is not to get onto the minority interest computation because we understand that is very simple. You will pick up the share of net assets. Our idea is to discuss that if there are any losses which are exceeding the balance of minority, then what do you do? Okay, so that's the objective. Yeah, so now in this case, on the date of acquisition, let's start this exercise. Okay, so on the date of acquisition, what do you do? First of all, you will compute the minority interest on the date of acquisition. Yeah, so for doing this, we can get on to one working note. So let me just take you to that working note first. Because every time there is a question and some of these things are required to be computed. So please remember, whether the question asks you for that or not, you need to calculate these amounts on the date of acquisition. Okay. Now, on the date of acquisition, net assets of the company are given to you. Correct? So it is what? It is 10 lakh and 80,000. So therefore, this is the amount of net assets total. Holding company has acquired 70%. So that means minority should be 30%. Okay. Now, in this case, what do you have? You have proportionate amount of net assets for those two companies. So minority is what? On the date of acquisition, 3,24,000. And on the date of acquisition, I think Nitin has shared the calculation very good. On the date of acquisition, you will also compute the amount of goodwill or capital reserve. So in this case, purchase consideration is higher than the amount of net assets. So that's why what do you get? Goodwill. Goodwill. Okay. So in this case, what do you get? Goodwill to begin with. Okay. Yeah. That is 2,44,000. All right. So 2,44,000 is the amount of goodwill. 3,24,000 is the amount of minority interest. Okay. Now let's move further. So you will plot these numbers in this table. So this is a table that we are trying to create. So on the date of acquisition, minority interest is 3,24,000 and you can give the reference of working. Okay. Then as we move further, what do you have? During first year, there was a loss of 2,50,000. Correct? During first year, there was a loss of 2,50,000. And the proportionate share of this loss will go to minority. Yes or no? Yeah. So 30% of this will go to minority, 25,000. Yeah. So if you adjust this 25,000, sorry, 75,000 against the balance of minority, what do you get? 2,49,000. Correct? What do you get? 2,49,000. Right? Okay. As a result, what will happen? This balance loss, 1,75,000, will only be absorbed by the holding company. Okay, so what is this 1,75,000? The amount of profit or loss which will go to holding company. Okay. So anyways, this was the share of holding company, so there is no change. Yeah. Now, moving on to the next year, X2, X3. Now, in the next year, what do you have? In the next year, once again, you have a loss. So what is the amount of loss in the next year? Can you tell me? It's 4 lakh. Yes or no? It's 4 lakh, right? Now, if you adjust this proportionate loss to minority, so what will be the balance of minority after adjusting this loss? Over to you quickly. Tell me. After adjusting this loss, what is going to be the balance of minority? Anil says 1,29,000. Correct? So that means minority still has the balance to absorb any loss. Okay. So there is no loss which belongs to minority which we need to pass on to majority. Majority means the holding company. Okay. So that's why only 2,80,000 will go to holding company. Okay. Now, let's move on to third year. In the third year, what will happen? There is a loss of 5 lakh. So what is the share of loss of minority? 1,50,000. And what is the share of loss of holding company? 3,50,000. So we'll allocate 1,50,000 and 3,50,000 to both of them. Okay. Now, if you adjust the loss of minority against the balance of minority, do you think minority is able to absorb this entire loss? Tell me. Do you think it is able to absorb this entire loss? Nitin says no. Dilip says no. Larry says no. Now, in this case, the excess which minority has not been able to absorb, what will you do? What will you do? To this, the standard says, now please read this line. To this, the standard says, if the minority has a binding obligation to and is able to make good the losses, so what will you do? You will transfer that to mine. Otherwise, what will happen? Otherwise, you will adjust these against the majority interest. Majority interest means holding company. Okay. So now in the given case scenario, because you are not told that minority will absorb this loss. So that's why this 21,000 excess will be passed on to holding company. Okay. So 21,000 is passed on to holding company. Okay. And if you pass it on to holding company, balance of minority will become zero. It will become zero. Okay. Now, moving on to the next year. Now we are in fourth year. In the fourth year, again, we understand there was a loss, 1,20,000. Now, share of this loss is what? 36,000 and 84,000. So do you think minority will be able to absorb this loss? Again, no. Again, no. So therefore, what will you do? Therefore, once again, you will move this loss to holding company. Okay. And thereby the balance of minority will become nil. Okay. Now, in the previous 2 years, this 21,000 plus 36,000. What is the total of these two? What is the total of these two? Quickly, 57,000 is what Hardik says. Now, this 57,000 you need to remember. Why? Because this is the total amount of loss which belongs to minority but which has been absorbed by majority interest. Okay. Why? Because we may have to deal with this amount in the future years when there is a profit. Yeah. Now, let's move on to fifth year. Now there is a profit in the fifth year. In the fifth year, there is a profit. So therefore, what do? Once again, you will share these profits to both of them, minority and majority, 15,000, 35,000. But now, majority interest holders are waiting. Yes or no? Holding company is waiting. Holding company is saying that in the previous 2 years, when there was a loss, so we absorbed that loss. Even if that belonged to minority, we belonged some portion of that. So now when there's a profit, so to the extent we have absorbed that loss, to the extent we have absorbed that loss, what is that extent? 57,000. This profit should also be passed on to us. Means the profit share of minority should be passed on to us. Till the time the loss which we have absorbed is fully zero. Okay. So therefore, this 15,000 share of minority, what will you do? This 15,000 profit share of minority, you will pass it on to majority. To majority. And thereby, this 57,000 loss amount which was absorbed by majority shareholders, this will come down. This will come down. Yes or no? So this will come down to 42,000. Understood? Understood? Yeah, everyone clear on this? Okay, Preeti is asking, sir, if we can transfer the loss by majority company at the fourth year in aggregate also, instead of in third year and fourth year separately. Yeah, so every time when you look at the loss which is absorbed by the majority, so you look at the total amount. You look at the total amount. Huh? So this table is just for the purposes of convenience. So in third year, loss share of minority given to majority was 21,000. In fourth year, loss share of minority given to majority was 36,000. So we are collectively looking at this balance. What was that? 21 plus 36, 57,000. Why? Because this information will be required by us. That's the purpose. Okay. Okay. Now Kiran is asking, sir, up to third year, holding company P&L is added for minority losses as 3,71,000. UT in X4, X5, it was added and made as 491. No. So I think you should not get confused by these amounts. Why? Because these are going to the P&L of the holding company. Okay. So this is not something you are required to look at and accumulate. This is not relevant for us. What is really relevant for us is these amounts. Because the question is not asking you for the closing balances of the P&L of holding company or the P&L which will be there in the consolidated balance sheet. Okay. So what is the idea of putting across this information? Idea is to just help you understand this thing. Additional consolidated P&L means what is that additional loss which is being borne by, this holding company year on year. So that's the objective of this column. Okay. So please understand the requirement of the question. Okay. Still, if you want to compute some of these amounts for your understanding, you can always do that, but not as a part of the solution because that's not required by the question. Okay. Now, moving on to next year. Next year, again, what do you have? There is a profit 1 lakh. So that's why this will also be shared by minority and majority. Minority and majority. And here again, majority will ask that still we are left with 42,000 of losses of minority interest which have been absorbed by us. So that's why even this year, this share of profit of minority should come to us. Should come to us. Yes or no? So once again, we'll have to do this. So if you do this, the amount of accumulated losses which majority was having in respect of minority, that will now come down. That will now come down to 12,000. So this will now come down to 12,000. Yes or no? Yeah. Okay. Now moving on to, I think, seventh year. Yeah. Okay. In seventh year, again, there is a profit 45,000 and 1,05,000 is the share of two companies. Sorry, two parties. Now, should we transfer this entire profit share of minority to majority? The answer is no. Why? Because to the extent, now let's get back to that requirement. Because now what do you need to remember? That if the subsidiary subsequently reports profits, then all of such profits are allocated to majority interest until minority share of losses which were previously absorbed by majority have been recovered. Okay. Now, as around the majority, what is the amount of the recovery which is pending by them? 12,000 is pending. Okay. Otherwise, they have recovered everything from minority. Yes or no? So, therefore, in seventh year, when the profit share of minority will be 45,000, so out of this 45,000, only 12,000 will be passed on to holding company. Balance 33,000 will be kept by the minority only. Why? Because after transferring 12,000 to the majority, the losses which they had absorbed for the minority in the previous years, okay, so that accumulated losses would have become zero. Understood? Understood? Everyone? Yeah? Clear on this? Everyone? Clear on this? Yeah? So now, as we discussed, this is again a very, very important concept. Okay, so any questions, any doubts if you have around this, please let me know. Any questions, any doubts if you have, please let me know. Tell me quickly. No questions? Clear? Yeah, so Preeti, Anil, they've confirmed, they're clear. Okay. Neeru is also clear, very good. So Larry is asking, sir, do we need to present the answer in the same manner? Excuse me. See, if you don't present it the way it's been given in the material right now, study material right now, then what are the other ways you can think about it? So if you believe you have some other way available, which will also be uh, presentable the way it is given in the question and will also provide the similar sort of clarity, then as regards the student, there's no format which is prescribed by the standard. Yes or no? Excuse me, just kidding. Okay. Now, some of these formats which you can see, they are all for convenience purposes. Okay, except for balance sheet, etc., for which there is a prescribed format. But for this solution, there's no format which is coming from the accounting standard. Okay, it's all for convenience purpose. So I believe, excuse me, if you present this in a tabular manner, that will be better. But if you believe there's some other mechanism available, you can always explore that. Yeah. But please be very, very careful. Huh? You should try to keep it presentable. Okay. Now we'll move further. So now what we'll do is we'll just try to get on to the consolidation requirements. So when I'm saying consolidation requirements, we'll try to look at some aspects around the consolidated balance sheet, consolidated profit and loss account, and some of the consolidation procedures which are available. All right, so let's look at the consolidation procedures first of all. So far, some of the things that we have covered. So therein we have calculated goodwill, capital reserve, minority interest. All of these are again very, very important. Now, once you do this, what is going to be the next step? The next step will be to merge two companies, means holding and subsidiary company. And the standard says that for consolidation, means when you will apply AS21 for consolidation, the approach that you will use will be line by line addition. Now, what do you mean by line addition? It means that all the assets, all the liabilities, all the items of P&L of the holding company and the subsidiary company will be added together. Okay, so let me just show this to you. So what is it that you'll do? So now if let's suppose there are two companies. Yeah, so say there is holding company H Limited, okay, and there's a subsidiary company S Limited, okay. And let's suppose there's a trial balance of two companies. So there are certain assets, there are certain liabilities, and there are various P&L items. Okay, and let's suppose some amounts are given to you for two companies. Yeah, so it could be any asset, any liability. I'm not getting onto those assets or liabilities right now. Now, for these two companies, what do? You will just simply add that. So if this is A, if this is B, then your first step will be what? To add all of these together. So you will do A plus B. So this is going to be your first step. Okay, you are adding these two. So let me just say this is consolidated set. Okay. Now, in this case, there are going to be some challenges. So let's try to understand those challenges. So if you add the assets, liabilities, P&L items of these two companies, so at times what may happen is that these two companies may have transacted with each other during the year. Yes or no? These two companies may have some balances outstanding against each other. Maybe H has sold some goods to S. Maybe S has given a loan to H. Yeah, so any type of transaction could be there between these two companies. And when you are required to prepare the financial statements of the group, so any transaction which is there within the group, any transaction which is there between the companies which belong to the group, can you just keep those transactions? Can you just keep those balances? Tell me, will that be appropriate to keep that? Tell me, will it be appropriate to keep those balances? What do you think? Pranav says no. Yeah, Hardik says no. We need to knock it out. Means you need to eliminate that. Yeah. So that's why every time you will do this line by line addition, what is it that you will need? First adjustment, or you can say adjustment one. Yeah. And that will be about elimination. Elimination of what? Elimination of intercompany balances, elimination of intercompany transactions. Okay. Yeah. So let me just say this will be D. Now, similarly, another problem may arise. Let's try to understand that. If there are two companies, and let's suppose in this asset, maybe there's one line item, say inventory. Okay. So we have inventory of H, inventory of S. And what did you do? You just simply added these two. Yes or no? You simply added these two. Now tell me one thing. What will happen, or what if that for the purposes of valuation, H was following FIFO method, S was following weighted average. So is that possible or not? Because these were two different companies. So is it possible that these two different companies may have different accounting policies? Yes or no? That is possible or not? Yeah. And if these two were following different accounting policies, then their inventory valuation would have been different. Now, if you add two inventory balances for two companies which are following different basis of valuation, so will it be appropriate? Tell me. Do you think it will be appropriate? Will it make sense? The consolidated amount that you derive, do you think that will make some sense? The answer is no. Yeah. Nitin says no. So that's why, what is it that you need to do? There's one more adjustment you are required. So let me just call it as adjustment 2. So what is that adjustment 2? That will be alignment of accounting policies. That will be alignment of accounting policies. Okay. So every time you will get into consolidation, so of course you will follow line by line addition approach, but you'll have to remember about elimination. You'll have to remember about alignment of accounting policies, if at all that is required. So we are not saying that everywhere this will be required. You'll have to look at, you'll have to understand the situations wherein it may or may not be required. Okay. Similarly, one more situation is possible. What is that? So let's try to understand that. It may happen that there are two companies, say H Limited, okay, it has a financial year 1st April to 31st March. Okay, but it has a subsidiary. It has a subsidiary, okay, which has a reporting year from January to 31st of December. Say this is S Limited. Now, when would that be possible? Say, for example, subsidiary is a foreign company. Subsidiary is a foreign company. So in that case, it's possible. Yeah. So now, if you are into any such situation, Bhavna, I'll come to this point. Huh? So if you were into any such situation wherein the reporting dates of two companies, what are those? Holding and subsidiary. They are not same. So what do you do? In that case, what do you do? Once again, you will have to align them. And how do you align them? You will have to ensure that their reporting years are same. Okay, so for this subsidiary, you should try to get the financial statements for the same reporting year. Only then the consolidation will be possible. Yeah. Or can you do this, that in the financial statements of consolidated version, for holding, you are picking up the financial statements, say from 1st April 2024 to 31st March 2025. And for subsidiary, you are picking up from 1st January 2024 to 31st December 2024. Do you think will it make sense? Tell me. No. Yeah. So that's why, what should you try to do in such a situation? Standard says in such a situation, you should try to get into this. Means for subsidiary, you should try to get the reporting date aligned with the reporting date of holding company. And how will that be possible? When the subsidiary also produces a set of financial statements for the same reporting year. It may be for consolidation purposes. But standard also understands that sometimes this may not be possible. Why? Because the subsidiary may face some challenges. Maybe for their local reporting requirements, they are required to follow calendar year. And they don't want to prepare another set of financial statements only for consolidation. Okay. So in such a case, what do you do? In such a case, standard says it's okay. Yeah. So it's okay. So till the time this gap between the two companies is 6 months or less. Okay. So till the time you have this gap for 6 months or less, it is permissible. It is permissible. But in that case, if there are any significant transactions during this period, if there are any significant transactions during this period, those significant transactions need to be picked up in the consolidated financial statements. Okay. So what should be your first approach? First approach should be to get on to this point. Align the reporting date. So if you are not able to do that, then the standard gives you an exemption wherein the gap of 6 months is permissible. 6 months means maximum 6 months. So it's not that you will always create a gap of 6 months. So if there is a gap of 1 month, that's okay. If there's a gap of 2 months, that's okay. 3 months, okay. Yeah, so you'll not create that to be 6. Okay, maximum 6 months is permissible. But for this 6 months or for that gap or during the period when you have not picked up the financial statements for, if there are any significant transactions, you will have to consider those significant transactions in the consolidated financial statements. Okay. So we can say that in the consolidated version that you will have, another type of adjustment which you may have could be in respect of alignment of reporting date. Yes or no? So another adjustment could be in respect of alignment of reporting date. Correct? Okay. Now, once you do all of these adjustments, now of course you have some questions around elimination. I'll come to that. Okay. We have not yet discussed. Okay. We're just trying to discuss the consolidation approach. Once you get into this, what will you have? You will have your other consolidation adjustments. Now, what are those other consolidation adjustments? Please don't forget them. Huh? So you'll also have others like recording of goodwill, recording of capital reserve. Yes or no? Recording of minority interest. So all of those things which you would have computed, so they will also go to the consolidated financial statements or not? Tell me, yes or no? So they will also go to consolidated financial statements? Yes or no? Yeah. So that's why I have bucketed them to others. Okay, so Bhavna is asking, sir, alignment of accounting policies means adjustment in the method of recording of transaction. See, alignment of accounting policy means that for two companies, holding and subsidiary, accounting policy should be same. And how will you do that? You will ensure that subsidiary company follows the same accounting policy which holding company is following. If that is not the case, if the subsidiary is following a different accounting policy, then for the purposes of consolidation, adjustment will be required to be made by the subsidiary in respect of those amounts to ensure that they are consistent with the accounting policy of the holding company. Okay. Anil is asking any other adjustments. So I think these are good enough. Huh? Okay. So I think so far these are good enough for you to look at. Okay. Sai, I would request you to send your query, please. Okay. Yes. So now, once you have all of these adjustments in place, then what do you get? That is when you get the CFS. Okay, so that's why for this CFS, what are going to be, you can say the amounts. So we can say this is H, which will equal C plus or minus D, okay, plus or minus E, then we can say plus or minus F. Yeah. So why did I say plus or minus? Because some of the adjustments may require reduction, some of the adjustments may require addition. Yeah. So all of these adjustments, once you do in respect of some of these amounts, that is when you will get this column. Okay. Which is going to be the final column for us. Okay. Wherein your consolidated balance sheet, consolidated P&L are ready. Okay. Yeah. Clear? Now the question arises that how do we do all of these adjustments? Okay, because I think the immediate question which will be there in your mind is how do we do these eliminations? How do we do this alignment? How do we do the alignment of the reporting date? Other adjustments, anyways, we have talked about quite a lot. Okay, so what we will do is we'll now spend some time discussing all of these requirements of elimination, account alignment, and we'll also practice that with the help of some examples. Okay. So now moving on to elimination first. And let me just remove this. All right. So let's move on to elimination first. Elimination of intercompany transactions or balances. It will involve both transactions as well as balances. Now, let's try to understand some of the transactions which may take place between the holding and subsidiary company. Say if we have two companies, holding and subsidiary. So let me just make it as H and S. So at one place we have H limited and S limited. And there's another situation wherein, let's say it is P limited and let me just call it as Q limited. Now these are subsidiaries for us. Now these are holding companies. H and P are holding companies. S and Q are subsidiary companies. Okay. Now, if let's suppose holding company sells to S limited. Okay. So there's a sale of goods from H to S. So what do you call this as? You will call this as a downward transaction. And if let's suppose Q limited sells to P, so what do you call this as? Upward transaction. This is called as upward transaction. Okay. Now, these terms, I won't say they are any relevant in the context of the accounting that is required to be done. But at times these terms may be used maybe by the questioner. So that's why it's important for you to understand. Anyways, we are trying to, we'll get on to the understanding of the requirement of elimination conceptually. But you should understand that if these terms are used, So what do you mean by that? Okay, or how do you need to apply that? So anything that flows from holding to subsidiary, you call that as downward. Anything that flows from subsidiary to holding, you call that as upward. Yeah, so that's the thing you need to look at. Now, we'll look at two situations, and for both the situations, we'll try to understand the transaction which may take place. Now, if let's suppose H had goods worth of rupees 100, okay, on which H has added a profit, say rupees 10, and these have been sold to S Limited. Okay. Now, H would have recorded a sales against this, and S would have recorded a purchases against this. Correct? Now, in respect of this, let me just also eliminate this part for the time being. I'll come back to this. Okay. Now, in respect of this, when the consolidated financial statements of H and S will be prepared, tell me what will you eliminate? Tell me what will you eliminate? Tell me quickly, what will you eliminate? Over to you quickly. Rashmi says profit, Hardik says 10. No, you will eliminate intercompany transaction. So what's the transaction? Transaction is that of sales and purchase. So this sales will be eliminated in the P&L and purchases will be eliminated in the P&L. Yes or no? So both of them should get eliminated. Yes or no? Yeah. 110 is the amount. Very good. Bhavna just mentioned 110. Very good. Now, it may happen that after this transaction, the goods which were sold to S are still lying with S. So, which means that at the year end, S has inventory of 110. Yes or no? S has inventory of 110. Why? Because all the goods were transferred by H to S, but S has not been able to sell them outside the group. Okay. Now tell me one thing, that if S is not able to sell the goods outside the group, can we say that this profit of rupees 10, so on this inventory currently a profit of rupees 10 is loaded or not? Yeah, so that's been loaded. Yes or no? If no such sale would have taken place from H to S, and the consolidated balance sheet of these two companies would have been prepared, can you tell me at what amount this inventory would have been recorded? Over to you. I'm saying if this transfer had not taken place and the consolidation would have been done, at what amount this inventory would have been recorded? Larry, Hartik, Anil, they are saying 100. Yes or no? But now, just because there is a transfer between the group companies, even though this profit is not realized by the group, what do you have? You have a situation wherein that inventory which should have been recorded at 100 will now get recorded at 110. Yes or no? If you look at the consolidated balance sheet, in the consolidated balance sheet, you will now be recording the inventory at 110. Correct? Do you think it will be appropriate on the part of the company to do that? What do you think? Will it be appropriate considering the fact that this profit has not been realized? See, if the company would have realized this profit of 10, then it was completely okay. Why? Because company has sold the goods outside the group, this profit is also realized. But knowingly that this profit is not realized, what do? You will have to eliminate this profit. You will have to eliminate this profit. This profit which is not realized, what do you call it as? Unrealized profit. So this is what you call as unrealized profit. Okay. And where is this profit sitting right now? This profit is sitting right now in this inventory of 110. So therefore, if you are required to eliminate this unrealized profit, where will you eliminate this from? Where will you eliminate this from? You will have to eliminate this from the inventory only. Yes or no? Yeah. So therefore, whenever you will get into any such transaction, please remember there are two eliminations you have to do. One of that, I think you knew. Why? Because maybe you are looking at some of the questions. But other one, you didn't answer. So you need to be very, very careful about it. So elimination of this unrealized profit you will do. So that is one from inventory. But please also don't forget, if there is a transaction, do you need to eliminate that transaction or not? And what was that transaction? Transaction was that of sale and purchase. So this also needs to be eliminated. Okay, so you'll eliminate sale and purchase transaction from the P&L, make them zero. Yeah. And after that, or along with that, you will also eliminate this unrealized profit from the balance sheet. Okay, because unnecessarily the inventory balance in the balance sheet is inflated due to this. Okay. Yeah. So now what we will do is we will look at one question. Okay. And in that question, we'll just try to eliminate this. Okay. All right. So if you can just move on to this question. Now this elimination, whether it's downward, in both the cases will be required. But of course, the approaches could be different. So we'll look at those approaches. Okay. So now let's look at this example. A holds 80% equity shares voting power in B. So that means A is holding B's subsidiary. A sells inventories costing 180 lakhs. Hardik, I'll come to your point. I think you'll get the clarity in this example. A sells inventories costing 180 lakhs to B Limited at a price of 200 lakhs. Okay. So there is a sale of inventory from A to B from 180 to 200 lakhs. So what is the amount of profit which has been loaded in this sale? Tell me quickly. 20 lakhs. Larry says 20 lakhs. Very good. The entire inventories remain unsold with B at the end of the financial year. So you are required to suggest the accounting treatment for the above mentioned transaction in the consolidated financial statements. So now it's very, very simple. So what is going to be your elimination? So in this case, what will you eliminate? Tell me quickly. In this case, what will you eliminate? So you'll say it's a downward transaction. It's a downward transaction. So in this case, what will you eliminate? In the consolidated profit and loss account, entire sale of 200 lakhs would be eliminated by reducing purchases, or you can say cost of sales. So your first elimination will be in the P&L, consolidated P&L. You will eliminate sale as well as purchase. Second elimination will be from the balance sheet, wherein the unrealized profit of 20 lakhs would be eliminated from the inventory. So how do you eliminate that? One, you will reduce the value of inventory. and corresponding to that, you will reduce the amount of profit. Okay. So let's try to understand as to how you will do that. Now, in the given example, when you eliminate this, okay, when you eliminate this, so let me just get on to this. So now when A is selling to B, goods worth 180 or 200 lakhs. Now, who would have realized this? Sorry, who would have recognized this gain of 20 lakhs? Who would have recognized this gain of 20 lakhs? Can you tell me? Can you tell me? A Limited. So that's why if you were to pass accounting entry, what is the accounting entry you will pass? So you'll say, consolidated P&L debit 20 lakhs to inventory 20 lakhs. So at one place, what did you do? You reduced the amount of inventory and you also took that impact to the profit. Yeah, clear on this? Yeah. Any questions on this? Yeah. Okay. Yes. Anil is saying P&L. Yes, exactly. That's the thing you'll do. Okay. Everyone clear? Any questions? No. Okay. Now, there's one more part to it, or there's one more situation. So we can cover that as well. So let's look at the other part. And this one you need to answer. Huh? For the time being, please forget about downward or upward. Let's not get confused with that. Huh? A Limited holds 75% equity voting of B. So A is holding, B is subsidiary. A purchases inventory costing 150 lakhs from B at a price of 200 lakhs. Okay. So inventory had a cost of 150 lakhs, which has been sold for 200 lakhs. So what is the amount of profit? Can you tell me? What is the profit which has been loaded in this inventory? Great. So Larry says 50 lakhs. Rashmi has the same answer. Riddhi has the same answer. Very good. So entire inventory remain unsold with A Limited at the year end. So in this case, can you tell me the eliminations you will do? Can you tell me the eliminations you will do? Quickly, over to you. Quickly, the eliminations that you will do. Over to you, quickly. What are the eliminations that you will do? Sukhveer says eliminate sale by reducing purchases. Very good. Okay, what's the other one? Hardik has the same answer. Riddhi is saying 200 lakhs for what? Okay, Bhavna says eliminate purchase and sale and also eliminate unrealized profit of 50 lakhs. So how do you do that? So can you tell me how do you eliminate this unrealized profit of 50 lakhs? Sukhveer is saying this profit will be reduced from inventory. Very good. So now, in the given situation, what will you do? You will eliminate your sales and purchases. So that is going to be your first adjustment. Okay. Now, what is going to be the second adjustment? Of course, this 50 lakhs. This 50 lakhs will be the second adjustment. So how will you eliminate this? Very clearly, at one place, you'll reduce the value of inventory. See, the value of inventory has to be reduced in both the cases, whether it is upward or downward. But in this case, because the sale has been made by subsidiary to holding, okay, so that's why the profit that you generate 50 lakhs, this belongs to whom? in the consolidated balance sheet, this profit would have been passed on to whom? Two parties, holding as well as holding as well as minority. So this profit would have been recognized by subsidiary, correct? But when the subsidiary would have recognized this profit, so this profit would have been shared by two parties, majority shareholders and minority shareholders. Yes or no? Yes or no? Yeah. So therefore, whenever you will have any such situation wherein the subsidiary is recognizing gain, so now when you need to eliminate that in the consolidated financial statements, how will you do that? You will have to reduce the share of profit of A as well as share of profit of minority. Both of them in a combined manner will be amounting to 50 lakhs only. But in the consolidated financial statements, P&L of subsidiary will not appear. Unlike the previous example, wherein the P&L of holding is given. In the consolidated financial statement, the profit of subsidiary would have been absorbed by holding and minority. So that's why you will have to eliminate this profit from those two places. Understood? Understood? Yeah? Everyone clear? Okay, so then I can see this query from Ram. So Ram is asking, sir, if the holding company follows, so it's a previous question. Huh? If the holding company follows FIFO method for inventory valuation and subsidiary follows weighted average, in such a situation, if there is not much of a difference in the valuation of inventory, is it okay? Can we consider that? Or still we should value as per the holding company? See, if you talk about it practically, so of course you can ignore. But if you look at the requirement of your question in the exam, so whether that difference is significant or not, you will have to make the adjustment. Okay. And we'll look at some questions around it. Fine. All right. So any more questions if you have? Quickly, any more questions if you have? Are you clear so far? Yeah, so this elimination, are you now clear? How do you eliminate? So please remember, elimination will not only be from the balance sheet, will not only be for the balances, that will be for both. Hardik is saying, sir, how do we present this in the consolidated financial statements? So we'll see that. Okay. So we are also going to look at some examples around the consolidated balance sheet, consolidated P&L. We'll get to see that. Okay. Of course, that is going to follow. Now, as of now, we are just discussing all of these concepts one by one. Once we are through with this, we'll move on to that full blown balance sheet also. And that's why we have picked up this approach. Huh? So we are just trying to look at all of these adjustments. Okay, clear? Yeah. Any more questions, any more doubts if you have? Quickly, please let me know. Yeah, everyone clear so far? No doubts? Sure? All right. So if you don't have any further questions, then I think we can take a break now. Okay. So we done a lot to cover as around the consolidation. Yeah. So what we will do is we can just meet after the break. Okay. So I think Manish, we can take a break now. All right. Hi, welcome back. So let's move on to one more example. Huh? Okay, so we'll now look at one example with the help of which we'll get on to the balance sheet. Okay, so just give me a minute. I'll also open this document. Anil has a question. So he's asking how the change in inventory valuations will impact intercompany transactions. See, change in inventory valuation will not impact intercompany transaction. That will have an impact on the consolidation. At one place, if one company has inventory, say 1 lakh, another company has inventory, say 2 lakhs. Now, what will you do? In consolidation, you will add these two. Yes or no? You'll add these two, you'll make it 3 lakhs. Now, in the consolidated balance sheet, you'll say my inventory amount is 3 lakhs. Now, if you have this inventory balance of 3 lakhs, what is the basis of this valuation? Is it FIFO or weighted average or a mixture? So if you say it's both, that is inappropriate. Yes or no? Because you have merged two numbers for which the basis is not same. So that's the thing you are required to look at. Okay, so it's not about intercompany, it's about consolidation. Okay, clear? And anyways, for this, we'll look at some examples. Huh? Yeah, clear? Anil, clear on this? Okay, so now let's move on to one example. Okay, so let's look at this question 10. Fine. So in this question, we'll look at as to how to present all of these items in the balance sheet. Okay, because some of you had questions how to present. So we are going to look at this presentation part around the balance sheet. H Limited and its subsidiary S Limited, their balance sheets are given to you. Okay, so in the question, you are given the information about their balance sheet. You are required to prepare consolidated balance sheet. Yeah. We are also given the information that this acquisition by H Limited of S Limited had taken place on 31st March. Okay, so in this case, the date of balance sheet and the date of acquisition happen to be same. They happen to be on the same date. Okay, so now in this case, what is it that you will do? In the consolidated balance sheet, you will have to record, you will have to do all of those adjustments that we talked about. Yeah. So every time, as we discussed, whenever you have any such sort of situation, what is the first thing you need to get into? Can you tell me what is the first calculation that you will get into? Quickly. What is the first thing? Very good. So Hardik says goodwill. Yeah. So every time you need to get into the calculation of goodwill or capital reserve. Now, in the given question, we'll also have to find out the minority interest. Okay. Why? Because that could be there. But for you to check whether there is minority interest or not for goodwill, for any of these things, what do you need? Percentage of holding of H in S. So is that information available in the question? No, that information is not available in the question. So that means you'll also have to derive that. You'll have to get into that computation as well. That is also not available to you. Okay. So let's get on to that computation now. Yeah. All right. So now we understand that equity share capital of S is 2,50,000. Each share is of rupees 10. So that means Total number of equity shares of S is what? 25,000. Correct? Out of these 25,000, 20,000 are held by H. 20,000 are held by H. Correct? So therefore, what is the percentage holding of H in S? What is the percentage holding of H in S? 80%. Yeah. So every time you have to look into this calculation if that is not available in the question. So if H holds 80%, so that would mean there is also a minority interest. So that's why in this question, we will also be required to compute one more thing. And what is that? Minority interest. Okay, which is again very simple. Why? Because you can just pick up the net assets and the proportionate share of net assets will be the minority interest. Okay. Now, percentage holding we have derived. Now, as a next step, what do you need to get into? Goodwill or capital reserve. So can you quickly compute that and let me know? So I'll just wait for 1 minute for you to solve that. Quickly, on the basis of the information which is available in the question, can you tell me the amount of goodwill or capital reserve? Over to you. We have solved a lot of questions around this. I think Rashmi has solved this. There's a goodwill. Anjali has solved this. There's a goodwill. 20,000. Okay. What about others? Goodwill or capital reserve. What are you getting? Riddhi is getting 50,000. What is that for goodwill or capital reserve? Tell me. Hardik is getting capital reserve 60,000. Sanya is getting capital reserve 60,000. Riddhi is getting goodwill 50,000. Okay. So I can see three different answers. Anyone else? It doesn't matter whether you are giving the right answer or wrong answer. Important thing is you are attempting this. Okay, Abhishek, Nitin, they are also getting capital reserve of 60,000. All right. So now, in this case, let's try to get into that calculation. So for calculating goodwill or capital reserve, what do we need? Two things. One is the purchase consideration, which is what? Cost of investment. So this cost of investment is what? Purchase consideration only. And the second thing is net assets of the subsidiary. Do we have that information available? The answer is yes. So we have the share capital and profit and loss balance. So the net assets of the subsidiary is what? 3,50,000. Okay. So using this information, we can calculate goodwill or capital. Yeah. So purchase consideration is 2,20,000 and net assets we calculated were 3,50,000. 80% of 3,50,000 is what belongs to H Limited. Yes, 80% of that belongs to H Limited. So that means 2,80,000 is the amount of net assets which have been acquired by paying 2,20,000. So it appears that the purchase consideration is paid in short. That is not in excess. It's short payment. Yeah. So the moment you have a short payment, what do you get? Capital reserve. Capital reserve. Yeah. So we have a capital reserve of 60,000. All right. Yeah. Now, do we have any other adjustment in the question? So if you go back to the question and let's try to look at all of those adjustments that we talked about. So we talked about goodwill. We have computed that. Minority interest. We remember we need to do that. Third was elimination. So is there any intercompany information? No. Is there any problem around the accounting policy? We don't know. Is there any problem around the reporting dates? We don't know. So that's why all of those adjustments you are not required. In this question, you are not required to get onto that. Yeah, it's a simple one. Now, In this question, therefore, in the balance sheet, what do you need to do? Very simply, you need to add the items line by line, line by line. Correct? So at the first place, when you prepare the consolidated balance sheet, what do you add? PPE. So these two you'll add. Correct? Current assets, these two you'll add. Tell me quickly. PP, these two you'll add. Yes or no? Current assets, these two you'll add. Right? Trade payables, these two you'll add. Investments, should this investment be added? Should this investment be taken to the consolidated balance sheet? No. Why? Because this investment is also a kind of intercompany transaction. Yes or no? Yes or no? Against this investment, you have proportionate equity capital of S Limited. So that's why what do you need to do? These two will get knocked off. And we have already knocked it off. Where? While computing goodwill or capital reserve. Isn't it? We use this cost of investment. We use this net reserves, or you can say the net assets of the subsidiary. Yes or no? Yeah. So therefore, for the subsidiary, you will not pick up the capital. So the capital of only the parent will be picked up in the consolidated balance sheet. Okay. Have we picked up all the reserves of the subsidiary? One proportion of majority we have picked up, the other portion will go to minority. And P&L balance of the holding, will you pick it up? The answer is yes. Yeah. So let's try to place all of these amounts in the consolidated balance sheet. Okay. Let's try to place all of these balances. Yeah. Okay. Now, in the consolidated balance sheet, what do you have? Capital, which is coming from parent only. Okay. Then you have P&L balance, which is coming from parent only, H Limited. Okay. Capital reserve, where do you get this from? We just computed that. Okay. Trade payable, we'll add these two line by line, right? Then as we move further, PP, we have added these two line by line. Current assets, we have added these two line by line. Okay. Now, another point which is required is about the minority interest. So minority interest, once again, do we understand how to compute this? Yes. We already have the information about net assets of the subsidiary, which we have used here. Remember, we used that here. Yes or no? 3,50,000. 20% of this 3,50,000 is what? Minority interest. That is what? Minority interest. So that minority interest will also be recorded in the balance sheet. So we'll place that in the balance sheet. Yeah. So therefore, using this notes, if you go and place all of these numbers in the balance sheet, what do you get? You have your share capital, reserves, minority interest, which will be a separate line item. Placement seems to be an issue over here. Okay, trade payables, non-current assets, that is what PP, and current assets. That's it. So in this example, what is it that you have done? Line by line addition. And there was only one adjustment. That was for goodwill, capital reserve, minority interest. That's it. Okay. Everyone clear on this? Everyone clear? Any questions on this? So I think with this, you would have got some clarity, or maybe how this presentation is required to be done. Okay, so Bhavna is saying presentation is not clear. Okay, so tell me what is it that you are not clear on, Bhavna? So I would suggest if you can just also prepare this balance sheet alongside. So in the balance sheet, what do you need to do? You will pick up PPE as it is, current assets as it is, or let me just go to the question first. So in the consolidated balance sheet, what is it that you will do? PP you will pick up as it is. Current assets you will pick up as it is. Means you will add these two. Okay. Trade payable you will pick up as it is. Yeah. Share capital and profit and loss. These two. One portion of this you have given to majority while computing goodwill or capital reserve. Second portion you will give to minority. Okay. So therefore, in the consolidated balance sheet, you will have capital of the parent and reserves of the parent plus proportionate share of the reserves of the parent, which you have taken to goodwill or capital reserve. Will you take investment to the consolidated balance sheet? No. Why? Because this has been knocked off against the capital. Okay. So if you place, so I'm not doing anything different in terms of computing all of these numbers. I'm just placing all of these numbers in the consolidated balance sheet. Yeah. So the format, of course, has changed. So if you are worried or if you are thinking that, sir, the format of the balance sheet which is given in the question is different from the one which is given in the solution. So yes, that's true, because over here you have looked at the requirements of Schedule 3, which may not be there in the question. So that is something which you are supposed to do. Okay. And this format is no different from what you would have covered under financial statements preparation. Yeah. The numbers are very, very simple to be picked up. In the reserves, you may have a question around capital reserve. Where do you get this from? We computed this at the beginning. Correct? Similarly, minority interest. We understand this is required to be recorded. And this minority interest will be shown as a liability. This will be shown as a liability. Okay, so that's why, where do you take it? You will take it to the liability portion. Okay, Bhavna, you are clear on this? Okay, so Bhavna is asking, sir, P&L का amount H limited का on plus S limited का 80% दोनों add होंगे? Yes. But 80% of S limited that you will add, that you have already considered here. Huh? Please don't forget. You have already considered that. You have already taken that. Yes or no? So if you have already considered, already taken that, don't take that to the balance sheet again. Otherwise, that will be a duplication. Yes or no? You will only pick up the figure once. If that is taken once, it's closed. Fine. Yeah. Bhavna, clear on this now? Okay, so then I think this query comes from Manvi. Manvi saying, sir, I didn't understand the calculation of percentage holding. No worries. So let's get back to that calculation of percentage holding. So if you look at the balance sheet of S Limited, what is the share capital? 2,50,000. Yeah. So how many shares are held by S Limited? Means issued by S Limited? 2,50,000 divided by 10. Why? Because each share is of rupees 10. Yes or no? Each share is of rupees 10. Correct? So what is going to be the number of shares issued by S? 25,000. And if you look at H Limited, it says H Limited has investment in S Limited. 20,000 shares of S Limited are held by H. So out of 25,000, 20,000 are held by H. So therefore, what is going to be the percentage holding of H? You tell me, Manvi, now. What is going to be the percentage holding of H? Tell me, Manvi, over to you quickly. What is going to be the percentage holding of H? Quickly, 80%. Now clear on this? Yeah. Any more questions? Okay, Bhavna is saying this is okay. For calculation of minority interest, share capital and P&L, both 20% calculating. See, Bhavna, I think the part that we just discussed before these questions. So didn't we solve a lot of questions around the minority interest? Did we do that or not? Tell me quickly. So there were a lot of questions wherein we computed the minority interest. Tell me yes or no. So were you there in the first half of today's session? In the previous session also? Tell me quickly, huh? Quickly, please confirm. Bhavna, waiting for a response. Yes, minority interest we computed or not? There are a lot of questions. You're not there. Okay, so I would suggest that please get on to the previous questions first. Okay, so in those questions, we discussed how to compute the minority interest. So maybe you have missed out on that part. Huh? So for calculating minority interest, you will pick up the net assets. Okay, and how do you pick up the net assets? Share capital plus reserves. So that's how you'll do this. So once you cover the previous part, that is when you will get the clarity. Otherwise, you will remain confused. Yeah, because all of those concepts are now going to be used. See, we are now on the consolidated balance sheet. Okay, wherein we'll have to apply all of those concepts. So if you miss out on those concepts, then automatically this problem will arise. Okay, so that's why I advise that please go back to those two parts which you have missed. Okay, that will help you. Okay, so Malu has a question. Malu is saying, how much is the total number of shares of this company? See, this is not a company, this is the group. And group doesn't have shares. Okay, so please don't get into that. Yeah. And even if you want to look at the shares of the group, that information is also provided to you. What is that? In the group, share capital of only the holding company was included. Yes or no? Yes or no? So what was the share capital of holding company? 5 lakh. Each share was of rupees 10 each. So that's why in the consolidated balance sheet, what do you say? You will say that 50,000 shares are there of rupees 10 each. And whose shares are this? That of H Limited. H Limited has issued these shares. Okay, clear? Abhishek is asking if it was a case of goodwill instead of capital reserve, then it would have been shown on the asset side. Yes. Intangible assets. Yes. Yeah, but in terms of that goodwill on consolidation, you present it separately. Of course, in some of the other questions, I think that are going to follow, we may have goodwill and you may get to see that part as well. Let me just see. I'm sure some of the questions will have wherein goodwill may also arise. Okay. Yes. Okay. So we'll pick up one question for that part as well. Fine. Then I can see this another question I just missed. Sai is asking, sir, in the consolidated financial statements, how this minority interest will be a liability? Can you please answer this question? So Sai is asking, sir, why this minority interest should be presented as a liability? Over to you, quickly. Can you please answer this question, everyone? Why should this minority interest be presented as a liability? Over to you, quickly. Okay, so in this question, wherein we presented this as a liability, great. Rashmi says below because it's a share of others. Anil says it's the shareholding of outsiders. Hardik says because it's a type of equity holding in subsidiary. Sukhveer says because this is the portion which is obtained by outsiders. Okay, so let me just help you understand this point. So now I'm sure this question could be there in the mind of other students as well. Now tell me one thing, that when H is consolidating S, okay, wherein the percentage holding of H in S is only 80%. Can you tell me what proportion of assets of subsidiary are being picked up by H? Is it 80% or 100%? Tell me. Is it 80% or 100%? We just solved that. All of you are saying 80%. No, it was 100%. So if you go back to the solution, see for all the assets, all the liabilities which the holding company has consolidated, what did the holding company do? So all of these assets which were there, yes or no, of the subsidiary, all of these liabilities of the subsidiary which were there, so holding picked up that on 100% basis. Yeah, current assets, PP, trade payables, all of those were picked up 100%. But actually, what was the share of holding? Was that 100%? Tell me. What was the share of holding? 100%? No. So even though share of holding was 80%, what did the holding company do? Picked up 100%. Picked up 100%. Okay. So that means 20% portion which does not belong to the group. I'm talking about the group right now. 20% share of the assets, liabilities, all of these items, which does not belong to the group, has been added in the consolidated financial statements of the group. Yes or no? Yes or no? Yeah. So at one place in the balance sheet, what do you have? Assets, which you have picked up as 100. Even though the group carries 80 of them, or should have taken 80 of them, what did the group do? Group picked up 100% of those assets. So that's why to balance it in the balance sheet, what will you do? Group will have to say that against these assets of 100, I have a liability of 20. That's how this will be balanced out. Tell me. That's how this will be balanced out. Yes or no? Tell me. So if the group will pick up 20 extra, so how will this be balanced out? By presenting a liability against the same equivalent to the extra portion. So this extra portion which has been picked up by the group, which does not belong to the group, that is what you call as minority interest, and that's why it's presented as a liability. Okay, but why is this done, or why is this required? Because consolidation is required using line by line addition, wherein all the assets of the subsidiary, all the liabilities of the subsidiary are picked up. Okay, so that's the rationale to present this minority interest, and to present this minority interest under the liability side. Clear on this, everyone? Sai, clear? Sai, you're clear on this now? Quickly, please confirm. Okay, so it appears he's not there. No worries. So we'll move on to one more question now. All right. So let's pick up one more question. Okay, so let's look at this question 11 now. Yeah. And I would suggest if you can just start solving this. So start reading this, start solving this. And once you do this, you may just let me know the total of the balance sheet. Okay, total of the consolidated balance sheet. So in this question, once again, you are required to compute, sorry, you are required to prepare consolidated balance sheet in this question. Okay, so you can just start solving this on your own. and you may let me know the total of the consolidated balance sheet that you will have once you do this. Fine. So I'll also start reading the question. Wait for a minute or two for you to complete, and then I'll get on to the solution. Okay. So H and S, they are providing following information as at 31st March X2. PP for two companies is given. Investment of H in S is given. 8,000 shares of S are held by H. Current assets, then you are given share capital. So can you tell me how many shares have been issued by S Limited on the basis of the information which is available? How many shares have been issued by S Limited? 10,000. Larry says 10,000. Yeah, Dilip is also getting 10,000. Very good. Yeah, so Nitin has the same answer. So that means 80% of shares of S here again are held by what? H. Yes or no? Yeah, so here again, H holds 80% shares of S, which means here again, we have minority interest. Yes or no? Here again, we have minority interest equivalent to 20%. Okay. Now, share capital of H Limited is also given. Then their balance of P&L, trade payable. We are given what is the amount of trade payable of two companies. Then it says H Limited acquired shares of S Limited on 1st July X1. Now, please remember, this information is quite important. Why? Because the goodwill minority interest that you compute at the first place is on which date? Date of reporting or date of acquisition? Tell me. Date of acquisition is what Anil says. And in this case, date of reporting and date of acquisition are not same. Yes or no? Yeah. Further, we are told that the balance of P&L of S Limited on 1st April X1 was 30,000. Yeah. So that means on the date of acquisition, we do not have any information about net assets of the subsidiary. So if we do not have any information about net assets of the subsidiary on the date of acquisition, how do we calculate goodwill or capital reserve? Yes or no? So that's the first problem that we have in hand. We'll have to deal with that. Yeah. All right. So now moving further. It requires you to prepare consolidated balance sheet as at 31st March X2. Okay. Yes. Over to you quickly. I'll just wait for a minute or two. You may also help me with the amount of goodwill or capital reserve, whatever you compute. Okay. So that is also important part. So to begin with, you can just give me that number and then of course the total of the balance sheet that you would have computed. Over to you quickly. Goodwill or capital reserve, what is it that you are getting here and the amount of that? And in respect of balance sheet, if you have prepared that, you can just give me the amount, means the total of the balance sheet. Okay, so Balesh has computed, so Balesh is getting goodwill. Great. What about others? Balesh is getting goodwill. Riddhi is also getting goodwill, 14,000. Hardik is also getting goodwill, but it's 20,000. Okay. Then I can see Abhishek, Malu, they are also getting goodwill, 20,000. Okay. What about others? Quickly. Rashmi is also getting goodwill of 20,000. What about others? Pooja is getting goodwill of 20,000. Neeru is also getting goodwill of 20,000. All right. So now let's do one thing. Let's look at the calculation of goodwill or capital reserve in this case. Fine. Now, in this example, do we have the purchase consideration? Yes, purchase consideration is there. So that is available in the balance sheet. Huh? So what is the amount of purchase consideration? So if you look at the balance sheet, cost of investment is 1,26,000. Okay. So that's the purchase consideration for us. Now, against this, what do we need? Net assets of the subsidiary on the date of acquisition. Net assets of S Limited on first, when did this acquisition take place? July 2000 X1. Now for this, we need two things. Share capital of subsidiary. Do we have that? Answer is yes. So that is available in the balance sheet. Share capital of subsidiary has not changed. So it's 1 lakh. The other thing that we need is reserves and surplus of the subsidiary on the date of acquisition. But is that available to us? No. But we are told that at the beginning of the year, on 1st April X1, subsidiary has a reserve of 30,000. Plus, we also have the amount of reserve on 31st March X2. That is what? 40,000. So which means that during the year, amount of reserves have increased. So what is the amount of change? Can you tell me? What is it that you will say is the amount of change? Preeti says 10,000. So that is 10,000. Yeah. So that means during the year, 10,000 is the profit earned by the subsidiary. Now, what do we need? Very simple. We can just simply allocate this profit throughout the year on a proportionate basis. Why? Because no other basis is available to us. We have the reserve on the opening date. To this reserve, if we add the proportionate profits up to 1st July 2000 X1. So can we calculate reserves balance using this approach? The answer is yes. Answer is yes. So that's why what should you do? You should say that 10,000 are the profits earned for full year. For 3 months period, what is going to be the amount of profits? Yeah. So you can do that. Tell me, you can do that? Yes or no? Yeah. So if you do that, so what is going to be the amount? Can you please quickly compute this amount and let me know? So 30,000 plus this proportionate amount, what do you get? So you get, tell me quickly, can you please solve this and let me know? 32,500. Yeah. So if you do this, if you pick this and if you pick this, so you get 32,000. Or let me just change this up. So you'll get 32,500. Okay. Now, for these two, proportionate amount needs to be picked up. Yeah. So this is the total amount of net assets of the subsidiary on date of acquisition. But for our purposes, for calculating goodwill or capital reserve, what do we need? Proportionate amount. Yeah. So if you can just compute the proportionate amount of these two, So what will that be? 1,32,500 into 80%. 1,06,000. You get 1,06,000. Yes or no? Yeah. So you have a purchase consideration of 1,26,000 and the net assets are 1,06,000. So therefore, what do you get? Goodwill or capital reserve? What do you get? Goodwill or capital reserve? Goodwill only. You'll get goodwill only. Yeah. Amounting to what? 20,000. So therefore, this 20,000 will be what? Goodwill for you. Okay. So this 20,000 will be what? Goodwill for you. Okay. Yeah. So every time there is a question, goodwill or capital reserve is what you need to compute. And please also understand that minority interest is also required to be computed on the date of acquisition. Now, can you compute that? Yes, of course. If you have the net assets available, so this net asset you can use, apply the proportionate share. As simple as that. Yeah. So wherever required, we will get on to the number of minority interest as well. Okay. But let's now move on to the balance sheet. So we'll now start placing all of these numbers in the balance sheet. Okay. So let's get on to the balance sheet. All right. So now in the balance sheet, what is it that you will do? Once again, let's apply the same approach. Goodwill or capital reserve, we have computed. So we'll place that in the balance sheet. Minority interest, will place that in the balance sheet. Other than that, do we have any elimination in the question? Is there any elimination required in the question? Rosaline, I'll come to your pointer slightly later. No. Is there any alignment of accounting policy, alignment of reporting date required? No. That is again not required. Okay. So that means, what is it that you will do? Very simply, now you need to apply line by line addition. So PP you will add line by line. Investments will you add? Will you take it to the balance sheet? Tell me. Investments. Preeti says no. Hardik says no. Why? Because this has already been taken and knocked off while calculating goodwill. Correct? Current assets. These two you'll add line by line. Current assets. These two you'll add line by line. Yeah? Okay. Share capital. These two you'll add line by line. Share capital. These two you'll add line by line. Hardik says no. For share capital, you'll only pick up the capital of H Limited. For S, you'll not pick. Why? Because one portion of the share capital you have taken to goodwill, and second portion you will take to minority interest. Okay. Similarly, P&L balance of H and S, you will pick up line by line. P&L balance, that means reserves of H and S, you will pick up line by line. There again, Rashmi says no. Why? Because only the P&L balance of H Limited you will pick up. For S, one portion you have already taken to goodwill. The other portion will go to minority. Okay. Trade payable, will you pick up line by line? Trade payable, will you pick up line by line? Yes. Okay. Very good. So now, what's the next step? Very simple. We just need to simply present the balance sheet in the format which is prescribed by Schedule 3. Yeah, so all of these items we'll have to use. So first of all, you can have this main balance sheet, or you can say the face of the balance sheet. And all of these amounts will form part of your notes. So share capital comes from H Limited only. Reserves come from H Limited only. Okay. Now about the reserves, I'll talk about one point. Okay. Minority interest. minority interest as around the minority. If you just look at this information as around the minority, what is it that you have? For the minority, what will you do? You will pick up the proportionate share of net assets. On what date? On the balance sheet date. So what is the amount of net assets? 1 lakh plus 40,000. 1 lakh plus 40,000. Okay. 1 lakh plus 40,000. Right. So this is the portion that you will take to the minority. Right. Now, 20%. Fine. Now, for trade payable, for trade payable, for trade payable, you'll say that items have been picked up line by line. For PP, you'll say items have been picked up line by line, right? Now, current assets, item have been picked up line by line. Okay. Then, because you calculated goodwill, and in the goodwill, what did you have? In the goodwill, what did you have? In the goodwill, you had 20,000. Okay. So either you can present this calculation of goodwill in the working note and place this as goodwill under the notes, or otherwise this calculation has been shown over here. Either of these approaches you can follow. Fine. Okay, so then you will place all of these numbers in the balance sheet. And I think somebody asked me, sir, what if there is a goodwill? So will you present that on the asset side? Yes. On the asset side, where do you present it? Intangible assets. Okay. Now, in this question, there's one more point. Let's try to understand that. When you pick up the reserves, what did we discuss? You will pick up the reserves of H. Yes or no? S you will not pick up. Why? Because one portion of that has been picked up by holding in the form of goodwill, and another portion has been picked up by minority. But in this question, let's try to understand this. Reserves of S Limited at the year end. What was the amount? Tell me. At the year end, what was the amount of reserves of S Limited? 40,000. 20% of this was taken by minority, which you have placed in the balance sheet. Yes or no? 20% of this you have placed in the balance sheet. I'm talking about consolidated balance sheet. Yes or no? Can you tell me, while computing goodwill, did you take 80% of this 40,000? Tell me. Yes or no? While computing goodwill, did you take 80% of this 40,000? Yes or no? Quickly, please confirm. Hardik says no. So what did you do? Actually, you broke this 40,000 for the purposes of consolidation by H Limited into two parts. In fact, let me just present it in this manner. We can say this is 30 plus 10. Yes or no? Yeah. So as around the consolidation of the remaining 80%, what did you do? This 30,000 you have picked up. Yes or no? This 30,000 on a proportionate basis you have picked up when? While calculating goodwill. Yes or no? while calculating goodwill, out of 40, what did you do? 30,000 you picked up on a proportionate basis. Correct? Tell me, yes or no? Everyone, yes or no? What about this remaining 10,000? Has this been picked up by the holding company? No. See, 80% of this 10,000 has not been picked up, neither by minority nor by holding. So where does this belong to? So this 80% of 10,000, this belongs to whom? Majority or the minority? Tell me. This belongs to whom? H limited? H limited? Yeah. So that's why this portion which has been left out, if you don't give this to the majority, so what will happen? Your balance sheet will not tally. Yeah. And you may be thinking, but sir, why is this required in this question? Because in the previous all of those questions, such thing was not required. Because in all of the previous questions that you have covered so far, your date of acquisition and the date of reporting was same. Yes or no? Only in this particular question, you can see this problem coming up. Why? Because your date of reporting is on this date and your date of acquisition is this. Okay. So that's why you face this problem. Understood? That's why you face this problem. Now clear on this? Now clear on this? Yeah? Everyone clear on this? Okay. So therefore, what is it that you need to do? In fact, to be more specific, yeah, to be more specific, this 40,000, you need to split into two parts. So one part of this will be what? 32,500. In fact, let me just change this. So this will become 32,500. More precisely, the amount on the a date of acquisition. And remaining portion will be what? 7,500. Yeah. So if you now compute this, you need to add this. So 7,500, let me just compute this into 80%. So this is what you will need to add to the balance sheet. All right. Yeah. So let's get on to the balance sheet now and let's add this in the balance sheet. After that, you'll see your balance sheet will match. Okay. So let me just get on to this calculation. So only when you place this number, so what will happen? Yes. So if you can look at this calculation. So this is what I'm talking about. 10,000 into 9 divided by 12. Why? Because the proportionate share of profits for 9 months. That was not picked up by holding. 7,500. Yeah. So if you include that, that is when your balance sheet will match. Okay. Yeah. Clear on this, everyone? Any questions on this? So I think Dilip has solved this. Preeti is asking, sir, if the date of acquisition is given for suppose 15th of July, then we'll calculate this up to 15th of July. Yes. See, proportionately, this is the only way you can compute until unless question specifies that up to the date of acquisition, this is the amount of profit. After the date of acquisition, this is the amount of profit. So you'll have to assume, and you will have to assume that on a time proportion basis, which may not be the best appropriation or best uh, assumption to be used, but if nothing is specified, so that is what you will do. Okay. Yeah. Everyone clear? Any questions? Okay, so Neha is asking, sir, how do we get on to this goodwill? How do we calculate 32,500? No worries, so we'll get on to that calculation. All right, so I think I can just look at your questions, doubts now. And as around today, we are not going to pick up anything more. Huh? So if in case you want to just move out, you can just feel free. Thanks everyone for your time and for the participation you have shown. But if you just want to stay around for the questions, you can just feel free. Huh? Okay, so we can just keep discussing some of your doubts. All right, so now, Neha, if you look at the reserve on the date of, sorry, on 1st April X1, so that was 30,000, correct? And at the end of the year, you had that 40,000. So that is changed by 10,000. So what does it mean? During the year, profits of 10,000 have been earned. So what will you do? You need to compute your reserves on 1st July. How do you do that? Allocate this profit on a proportionate basis over the time. So if you do this, what do you get? 2,500 for 3 months. 2,500 for 3 months. So 2,500 if you add to 30, that is how you get 32,000, which you are placing here. And why is this required for calculating goodwill or capital? Clear? Neha, clear on this? I think Rojalyn has also got this. Okay, so then I think Hardik has shared one document. Okay, so I'll just download your document, Hardik, and I'll also make a note of this query, which you have just mentioned. No worries. So I have made a note of this query, and let me just put down your query over here. Okay, so this is the query, right? So I'll make a note of this. I'll just look at this and come back to you. Fine. All right. Any more questions? Any doubts if you have? No? All right. So then I think we can just close our session now. And please try to revise all of these things that we have covered, because we are not yet done. Okay, so on the consolidation, there are still few more things which are pending. We plan to complete that in the next session. And in the next session, we'll also be starting with the new accounting standard, which will again be around consolidation, but that will be more about associates. Okay, so AS23, we are planning to pick up in the next session. Okay, so we'll wrap up this part, AS21, and then we'll get on to the next part. Yeah, so I think Tanu has a doubt. Yes, so Tambeshwari, I've just made a note of your query, right? And Tanu, if there is any query related to any particular question, you can just send it to me. I'll just make a note of this. Yeah, I'll make a note of that. And of course, I can just try to, because these are big questions. I'll have to just go through that complete question solution. And if you can just be very, very specific in terms of that query, that will be helpful. If you'll say this entire illustration is a problem, so that's very, very difficult to be discussed. So you can just be very specific. Yeah, so just share that query and I'll just try to come back to you on that. Okay. Yeah. All right. So thanks everyone for your time and for this wonderful participation. Thanks so much. Yeah, but please make sure you revise this. Okay. All right. So Manish, I think we can close this. Manish, you're there?
Recording stopped.